Hello everybody, welcome back. I apologize, it has been a very long time since I have done a subscriber portfolio review series, and I'm not going to lie guys, I'm a little behind on it. So, if you sent yours in and I didn't quite get to it yet, don't be afraid to reach out and remind me to do it, and I'll gladly do it. But today I was pushed out of my comfort zone and encouraged to do his portfolio, and of course, it's Aria from Quality Investing with Aria. So today, as per usual, I'll be going over his portfolio, his circumstances, I'll be giving any feedback, my thoughts, what I like, what I don't, and so much more. This is a great series because it promotes transparency, something for some reason a lot of big finance channels can't do. I'll also leave links to Arias' channel in the description box. Thank you and roll the intro.
Hello, I like money.
Alright, so to start off, we always like to know the investor's age, their objectives of the portfolio. Some people are 18, they're investing for growth, retirement in 20 to 30 years. Some people are in their 40s, looking for passive income in 5 to 10 years. It all varies, and that plays a big part in my thoughts on the positions and stocks overall. And guys, please take note, if you're going to submit your portfolio, which you should do, link in description on the Discord, direct message me from there. Please be like Aria and provide as much details as possible. This guy wrote me an essay on his portfolio, and I love to see it. If you tell me you own 3M, AT&T, and SHD, I can't really do much with it. Aria shares that he tries to buy high-quality businesses that are growing their revenues above 10% clip and free cash flow above 15% clip. I try and do this with these businesses that trade a similar valuation to the S&P 500, 3.3% free cash flow yield, and 28 PE right now, but obviously that's going to fluctuate. Also known as buying amazing quality growing businesses at fair prices. He ain't going for no MPW. He looks for businesses with competitive advantage that are often mission critical or essential to the existence of customers. Companies like Starbucks, obviously. These businesses tend to enjoy an oligopoly industry dynamic, which can provide quality, outsized shareholder returns in the long term. These are durable businesses that enjoy a long runway of growth and can maintain their status for extended periods of time. He looks for recurring revenues in each investment, as he believes it suppresses the possibility of management missteps and overall just things that naturally can go wrong in a business. Cheers and love your videos. Thank you very much. I appreciate the kind words. So first off, a lot of strict characteristics, which is obviously a very positive thing, and a lot of specific characteristics, especially when it comes to these qualities. Now, he looks for, generally really good qualities in businesses, like growing free cash flow, recurring revenues, but he's very specific in the way that he looks for it, which I actually think is really good. My only concern with this would be if he ever kind of grows out of investing or wants to take a more passive approach to it, this may not be the method. Thankfully, though, subsequently, these are really good businesses, and you don't have to keep your eye on 24/7. This is why I'm really just leaning more towards, a passive approach when it comes to my investing, is because, there may be a day, and I even have, phases of it now, where it's I'm not in investing mode. I don't want to be doing deep dives. I don't want to spend my afternoon looking or researching Visa and Starbucks. Yes, we love investing, but we can't predict what's going to come in the future. There may be a day where Aria meets a lovely lady. She takes up some of his time, his bank account perhaps, and he can't be doing deep dives on Visa and MasterCard. It's unfortunate, but that's life, and that can happen to anything. But Aria obviously has a love for investing, researching business and stuff, so I really don't see that going away, but life can get in the way. It happens with anybody. But I have nothing bad to say really about the strategy. It's really good. Next, we'll look at some of the key characteristics and metrics of his portfolio before we get into the holdings. To start off, we have operating and free cash flow margins of 20%. I just love to see it. 2.2% buyback yield, which is actually pretty impressive. Forward 2-year earnings per share of 26%, another very good metric. PE of 33. Now, that's obviously a lot on the higher side, higher than the S&P 500 right now, but obviously these are very fastly growing businesses, and if those cash flows and the estimates that for growth that actually go through, one could make the argument that's fair value, even undervalued. Obviously, there's going to be a correlation between the quality kind of companies you're investing in and the valuation. For if you don't invest, basically higher quality businesses are going to trade at a higher valuation than lower quality businesses. Return on tangible assets of 35.73%. That's a really solid number. Alright, I want to thank the sponsor of today's video, the Delta app by eToro. Now, you guys know I've been partnered with Delta for a little bit here now on the channel, but they have an exciting new update to their app. From behind the scenes testing and me personally using the app myself, I can say that this is definitely an upgrade from the previous version. The interface is definitely a lot cleaner, and it makes it even more convenient for me to see when my favorite stocks are up or down for the day. It's the best kind of adrenaline rush, and the adrenaline rush that you can get completely for free, and they also have the option to track crypto and NFTs if that's the kind of stuff that you're into. They also have a new Discord community as well where you can get access to new features before anybody else. Now, since Starbucks is the only company that I'm majorly tracking in this app, it even gave me a personal recommendation and a bit of a warning that my portfolio is heavily consolidated into consumer discretionary. This is so sick, and if you're a beginner investor, it can definitely maybe open your eyes to something you haven't been seeing before. Thank you once again so much to Delta. You can download it on iOS or Android. The link's in the description. Thank you, Delta, and on to the Alright, so let's get into the holdings here, and this is going to be a very interesting and potentially controversial for some of the viewers here. He only has 6 holdings in his entire portfolio. And this is updated. He sold MSCI and he bought into MasterCard with that money, so that is updated right now. Obviously, the elephant in the room right now is Amazon sitting at 38.8% of his portfolio. This might be a record for the largest weighted individual holding on the channel. I'll say this, I don't have any holdings that are above like 11% of weighting in my portfolio, which may or may not be a mistake, judging on your perspective, but 38.8%, that's really high conviction, and I think there are only a few businesses in the entire world where I'd be completely fine having it be 38.8% of the portfolio. I'd like to have it be trimmed a little bit. I'd maybe max out at 25, but 38%, that's a lot, I'll be honest. I'd say depending on your gains and, where you think the Amazon's valuation is at really long term, potentially look at trimming it and reallocating it into some other better ideas. But Amazon is just one of those companies. It's such a high quality business. It's really starting to print free cash flow right now where I could see if you just want to hold on to it and I'd be fine with it personally. He's an Amazon fanboy, so I really don't blame it at all for having the high conviction in the company. But once again, anything can go wrong with any sort of business. Some have higher risks than others, and some have lower risks. I'm sure he's going to be in the comment section. I'm very curious to hear his opinion on potential FTC intervention when it comes to Amazon. Obviously, that dirty, wicked witch Lena Khan wants to ruin anything fun and anything that makes money for smart people. But yeah, overall, I really like Amazon. I'm getting exposure through it through SHG, which again, Aria is a big proponent of. Amazon's an awesome business, though. 38% is also a lot of allocation, so I think it really comes to his risk tolerance. Obviously, no risk or reward, so go for it, honestly. Next, he has Salesforce, which makes up 29.6% of the portfolio. So with those two holdings, that makes up about like 70% of the portfolio, which is absolutely insane. Salesforce, I honestly don't know a whole much about in terms of its business quality. I know it has very recurring revenue, and that Joseph Carlson owns it, and that's like his only bad stock. But besides that, I really don't know a whole much about it, and I really haven't been doing too many deep dives on many businesses that I've been looking to add to recently. It looks fine on the surface. For me to actually be interested and potentially invest, it would probably have to go back to the levels where it went after the earnings a month ago. They're growing their cash flows at a really solid rate, and I don't have much bad to say. I don't know if I'd love it being 29.6% of the portfolio, but I'm sure he definitely loaded up on that dip, and I'm sure he has some gains already from it. Next, he owns Google, which I really love, at 10.9% of the portfolio, and it's crazy. Google's had an unprecedented run-up. We weren't expecting it. I'd honestly like to see him build up maybe Google in the portfolio. If I got Google at a similar valuation as Salesforce, I would absolutely love to have more Google than Salesforce. Once again, though, right now in my portfolio, I'm not really looking to add many individual holdings. SHG is plenty for me, and I get plenty of Google exposure through there. Next, the new position MasterCard makes up 9.5% of the portfolio. I really like this holding. Visa and MasterCard, very similar businesses. For some reason, he's a Visa hater, which I don't get whatsoever. I guess he messes with lower market share, but to each their own. But in all seriousness, though, I think you're going to get very similar returns with Visa and MasterCard. I know he believes that MasterCard's a little more undervalued than Visa right now, but you can't go wrong there whatsoever. Next, he owns Paycom at 6.5% of the portfolio. I don't know a whole lot about this one, to be completely honest. I know Dividend Dude and Aria likes to hype it up. I don't know much about it. I haven't really done any deep dives into its business model, so I'm not going to further comment whether it's good or bad. And then his semiconductor play is ASML, of course, which has had absolutely insane performance over the last 5 years, and I'd ever wonder if he would want to potentially trim out of it. So I think with the portfolio, honestly, the weighting, I'm not the greatest fan of. I'm more, max out 15-20% kind of guy, but obviously, I think he has a different view when it comes to if you find a convicted business, don't be afraid to really put your foot in the entire water, And I mean, I respect him. That's something I'm definitely trying to do more as an investor. I think he has room to trim out of gains on potentially Amazon, ASML. I'd love to see him build up that Google position and potentially join the CRM and Amazon. And I know he is a big proponent of SHG, and I'm pretty sure he owns it in a Roth IRA. But honestly, a lot of these companies are in SHG already, and I'd be fine with just getting the exposure to that, not having to consistently worry about selling in and out of the companies and, constantly paying attention to all of them. Overall, though, a really good portfolio. He's very picky when it comes to his positions and businesses that he invests in, and I gotta respect it. I love the recurring revenue metric in the portfolio, too, and that's definitely something I want to implement into my portfolio. I just think his portfolio is missing one thing, and I'm not gonna say what it is. Feel free to check out his channel. I'll leave a link to it in the description. Thank you all for watching. Smash the like button, subscribe, and do dividend stocks on drugs. Have a good one.